What's going on, guys? Welcome to Trading in the Trenches. Let's jump into this week's top stock picks. All right, first let's take a look to see if there's any news. So there's a lot of things happening. No red folders, so I'm not really concerned. Jolt's job openings, 10 a.m. This is on Tuesday, September 30th. All right. Let's see, what's this? Number of job openings during the reported month, excluding the farming industry. All right. So we're about to find out how many jobs are open versus. I'm sure they. I'm sure they use these numbers to determine what the economy looks like in terms of people finding jobs, right? They probably compare and contrast the unemployment numbers and stuff like that. Wednesday, October 1st, ISM manufacturing PMI. Surveyed purchasing managers in the manufacturing industry. So, about to start figuring out what's going on in the manufacturing industry and, yeah, manufacturing prices. So, manufacturing stuff. And then on Thursday, we have our unemployment claims. So, you see, guys, the news is like following a specific pattern, right? Tuesday, we find out how many jobs are open in the market. Wednesday, we find out about manufacturing stuff. And then Thursday, we find out unemployment claims. And then Friday, we find out the hourly earnings, non-farm employment change, unemployment rate. Let's see. So the non-farm employment change in the number of employed people during the previous month, excluding the farming industry. So it's consistent, right? The last little bit of data was excluding the farming industry as well. And then unemployment rate, percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So we're going to find out not just how many people are unemployed, but how many of them are looking for jobs. And then ISM Services PMI, serving purchasing managers, excluding the manufacturing industry, right? Because we already saw they got the manufacturing numbers with the on the previous days. What was it? ISM manufacturing PMI. All right. And then here on Friday, they do ISM services, but excluding the manufacturing folks. So, news is consistent. Sounds like it's going to be a pretty volatile week. I think there's heavy news every day almost. 2, 3, 4. So every day but Monday. So essentially Monday is going to be the day to either get in and have a lot of volatility hit the markets throughout the week, or get out and watch the volatility hit the markets and wait for that second week of October to get back in. All right. Well, I guess I'll just stop right here for now. I've been doing some changing in terms of the way my channel looks. Change the name, change the logo, change some of the thumbnails. Just trying to make things a little bit more exciting for you guys. All right, let's jump in. So, close my Gmail. We got some names here. Some of these names popped up using the screener that I always show you guys. Some of these names have popped up in other places, and I just added them to the list. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we got 13 names. Let's run through them. Okay, so this is ETN, Eden Corporation. I have no idea what these guys do. By the way, if you guys have not noticed by now, um, it probably hasn't been mentioned, but I don't really care what these companies do. I'm trading a very technical trade setup, and so I'm just looking for a specific pattern. And as long as whatever name or security it is, as long as it meets the requirements that I look for in my setup, then I will trade it. I just mentioned this because I have this guy that I talk to frequently, and we share tips with each other. His brother works for a hedge fund, so he's always moving millions of dollars, and he will occasionally give me some tips, really good tips that have put some money in my pocket. But I do the same, I'm like, hey, this stock is setting up, and it looks good, like it's gonna make a move. And his first question, like 99% of the time, is, what does the stock do? And I always laugh because I'm like, yeah, I have no idea, man. Not only do I have no idea, I don't care. It doesn't matter to me if they sell clothes, if they buy cars, if they sell internet, if it's a store, it's irrelevant to me. I'm a very technical trader. My concern is the technical analysis. I don't care about the fundamentals. I don't care what the company does. If it's a publicly tradable company and it meets all the requirements that I have, then I will take a look at it. All right, that's enough of that. So this is a monthly chart on ETN. Plenty of space between where the price is currently and the 3 ATR. So I like that. If I was going to place a trade here, it would definitely be on this 195-minute chart. Price is not too far from the POC, the point of control. So this is where a lot of the buyers and sellers are positioned, making it a great place in terms of defining risk, right? If I was going to set a stop loss, it would be just under that zone. And then, of course, to find my take profit levels, I would slap on my Fibonacci retracement. So my first area of interest would be here at the 702, 376, 19 cents. And then my second area would be up here at the 1272 level, or near the 3 ATR. Somewhere between 385 and 389. All right. This is giving a great risk to reward ratio, right? Risking $1 to make $3.50. I'm happy to take that bet any day. If this thing keeps cranking and it gets up to TP2, the 1618, right? Risking $1 to make 5. I mean, this is just lovely. You can see that the POC is a important area, right? It worked as resistance here, then it was support, came down, support. So that's what the POC is, the point of control. All right, ETN looks good. Let's move on. SPG. This is SPG on the monthly. This is a really healthy looking chart, right? Healthy move. Price is up here a little bit. Weekly looks good. Daily, this is the one that really interests me. Right, price is just broken through this major resistance at 184.75, right? Rejected here once, twice, three times a lady. And then price finally broke out. So because this is the daily chart and price is already extended off these moving averages, I will be looking for something maybe like on a 30-minute chart, 15-minute chart, 10-minute chart. So a 10-minute chart is starting to set up. If you're just tuning in for the first time, when I say starting to set up, I simply mean that there are red or orange dots down here, which means that momentum or energy is building up and the stock or the security is getting ready to make a move. There's an example, right? Orange, red dots, price is flat, and then they turn green, price goes crazy. Orange dots, they turn green, price shoots down. Orange dots, all right, price is moving, but not so much. Dots turn green, price goes up. Orange dots, dots turn green, price goes crazy. So essentially, the idea is to get in on orange dots. You want to buy the contract or buy the stock on orange dots or red dots, and then take profits or cut your loss when the dots turn green and the move is made. So I'll be looking for a day trade essentially here in SPG. Why would I not play the daily chart? Because my ideal buy zone is going to be between the 21 and 34 EMA. So somewhere down here. So unless this thing pulls back, which I would just doubt, only because it finally broke out of this box that it was in, right? It was trading between 184 and 178 since the beginning of September, essentially. And it finally broke out. So I don't expect it to pull back on the daily chart, but on a 10-minute chart, price is not too far from my buy zone. All right. Price is up here at 185 and 40 cents. And my buy zone is essentially 185, 184.86. All right. The white line, just for informational purposes, is the 8 EMA. So we have the 8, the 21, the 34. All right. That's SPG. Let's move on. This is DLR. When I saw the ticker, I thought it was Dollar Tree, but it's Digital Reality Trust. The weekly here is squeezing, and price is really close to the buy zone, so I like that. And we have earnings Thursday, October the 23rd, so that's interesting. What's about on the daily? So looking at this pattern here, looking at this pattern here, I can see that it looks like a two-step pattern might be formed. Let's go down. So this is the 195 chart. And indeed, it does look like two-step pattern. If you haven't watched any of my two-step pattern videos, it is essentially an N. Like that. Zigzag. What would make it an actual two-step pattern is for the pattern to be symmetrical pullback and for the symmetry to line up with two other Fibonacci levels. So let's set this up. If you've never seen the two-step pattern, I'm going to set it up. First of all, I love this shape. This is a bull flag, as I like to trade them or call them. All right. I gotta extend these lines to make it an actual flag. That's my bull flag. Okay. And also within my bull flag, I got my squeezes and what appears like a two-step pattern. So let's set this up. So I'm going to click on this trend-based Fibonacci extension. All right, I'm going to click the high of this move to the low to the most current high. Okay, so it's a 3-point tool, high to low to high. It measures this pullback to see if there's a symmetrical pullback happening from the new swing high. So the pullback from here to here, this distance, would put a 100% symmetry down at 169.99. Okay, so that's the first level. The second level is going to be using the fib retracement tool. I'm going to grab this low from this swing low, right, the previous swing low, and I'm going to go to the same high, which is the most recent swing high. So now we have two levels here, the 169.99, this is 169.68. This yellow line, I have it color coded so I know my lines, of course, but just so you all know, is the 382. So I'm going to click on it. I'm going to go to my settings, my template. I'm going to click this one, 382, and all the other lines disappear. All right, so I have my charts set up for the most optimal customization for me, right? So now I'm going to look for a Fibonacci extension level. So I'm going to use this swing low here, this little swing, right? And I'm going to put it again to the most recent swing high. I'm going to go into my settings, reset my numbers, and we see another level right here at 169.27, which is the 1272 Fibonacci extension level. So now I've got 3 Fibonacci levels underneath the pattern, and this is going to define my risk. So what does that mean, define my risk? It means that I can take a trade on DLR, and underneath this zone will be my stop loss. Okay, so this zone was 169.27 to 169.99, and this is called a fib. I'm gonna put the entire name, of Fibonacci cluster. Okay, so that's where my risk is defined. I like to go a little bit underneath the zone to call it a stop. So my actual stop loss would be at, can you guess? 169.27 cents. That's all. That's all I need to know if price goes underneath that zone, that I'm wrong, the two-step pattern is invalidated, the zone is violated, time to exit the position. So assuming we got in where price closed on Friday, and we get out here, this is the risk that I have to the downside. And then to find my TP, right, my take profit, I'm going to put my Fibonacci retracement back on, get my lines, get my zone. All right. I like this chart specifically because my first TP ends up lining up with the 3 ATR level. So it's confluence, right? Multiple things pointing to this area that price has a probability, a decent probability of coming up here. I would, let's say I took this trade and I bought multiple contracts. I would sell one somewhere between this 172.97 and 174.45, or 170, that's 173.97. And 174.45, simply because this is the point of control, right? This is the area I mentioned before. You can tell by how far this volume sticks out in comparison to this volume here that's not so prominent, right? And also the point of control, I have it shown by this dark red line that comes across the screen. So essentially my first TP would be about a 1-to-1 risk reward ratio, risking $1 for another dollar. And then the next target would be up here, risking $1 for $2.50, and so on and so forth. All right. My final target being this 181.85, which would be giving me a 1-to-4 risk reward ratio. So if I bought 3 contracts, I'd sell one down here around the point of control. I'd sell the second one up here around 177, and I'd look to sell the last one up here around 181. All right. So this is a Fibonacci cluster. This is a 2-step pattern. If this zone holds, what I would want to do is zoom in to either a 30-minute chart or a 15-minute chart and look for a trigger. The 15-minute chart has already triggered. By trigger, I mean this white line, the 8 EMA, has crossed over now this dark blue line, 34 EMA, which would be the first move, that is the earliest move showing that the trend is reversing. You see, since prices dropped and the 8 crossed under the 34, it has not crossed back above it. So this has been about 3 days, right? 3 days of this pattern where price just fell. Okay, and now on Friday we've got the crossover. So the fast trigger would be here on the 15-minute. The slow trigger would be here on the 30-minute. Okay, regardless, if you wanted to enter, you could enter this position. Your zone is defined, your risk is defined right underneath this zone. And so essentially from this position, you would just risk about $2.47. And if you catch the trend reversal early, your upside is $10, right? If it goes all the way up there. So that is the 2-step pattern in a nutshell. And look, the swing high on the daily is up here at 182, which means that if price were just to retest that, it would make sense, right? That TP3 ends up here at 181.85, just 15 cents below the swing high, making it an appropriate target. So hope that makes sense. Let's open up a chart for you guys. Bing bong. This is where I learned about the 2-step pattern from this lady, Carolyn Burridon. She is named the Fibonacci Queen. And this is her book. All right, so if you're interested in that, you can go to Amazon, Bing bong, and you can find this book. This is cheap, by the way. When I bought this book, it was $80. All right, so 58 bucks. Not bad at all. Okay, let's move on. CEG. Oh, look at that. Interesting, right? This stock is relatively new. It's only been trading since 2003. Publicly anyways, right? It's got a weekly setup. It's got earnings coming up on November 10th. No daily. It's got a 195-minute setup. And as you can see, right, price was coming down all of August. And then finally, mid-September, we got the cross. right? This is the early signs of the trend reversal when the EMAs are now stacked positively, 8 over the 21 over the 34. We got our squeezes, and price is not too far out of the buy zone. All right. So price is at about 331. The buy zone would begin here about 329 and come down a little. All right, so about 325 to 329 would be the buy zone. I would stop out underneath 325. And for upside targets, there you go. All right. So some awesome risk reward ratio again. So this first little resistance, risking 1 to make 175. Up here near 3 ATR, you're risking $1 to make 366. And then up here near 5 ATR, risking $1 to make 621. So really awesome risk reward ratio. All right, this is Duck or Duke. Monthly's got some space. The weekly's got space. This weekly chart looks really nice. PLC is right here at 116. And the daily also looks really nice. Right? Moving averages are now stacked positively as of Wednesday. So very fresh trend change, trend reversal. Really good looking, healthy looking chart here. Again, really good risk reward ratio, right? Even if you got in where price closed, you could close, stop out right under 121. TP1 would be up here, giving you a $1 to $3.60 risk reward ratio. If you just took it to 3 ATR, still 1 to 187. And if you came up to the 702 resistance, risking 1 to make $1.20. Ideally, you buy more than one contract and you can sell on the way up, right? Sell one somewhere around here, 2 at your first target, and 3, second target and beyond. That's Duke VST. Let's check out the monthly. Some space there, the weekly, right? Again, when I say there's space, I just mean between where price is currently and the 3 ATR. This daily does not look bad. So the EMAs are not stacked positively, right? The 21 is over the 8, but the 8 is still over the 34, which is what's most important for me personally. All right. Just wanted to zoom out a little to show you all, for those of you that maybe might be joining us for the first time, why 3 ATR is a great target, right? Price gets to 3 ATR, gets rejected, 3 ATR gets rejected, 3 ATR, 3 ATR rejected, 3 ATR rejected, 3 ATR, 3 ATR, pops up above it for 2 days and then drops, right? Over it, drops, up, drops. So 3 ATR is a really healthy spot to take profits. 3 ATR, 3 ATR. Right, the same pattern repeats itself on lots of charts. It's not to say that price has to stop there, but I mean, look at this pattern. This is since April of 2024. Essentially, it's been a year and a half, and price didn't stay over 3 ATR for more than a day. This is a 195-minute chart, so these 2 candles up here is actually 1 day. right? This is June 3rd. This is June 3rd. So for one day. All right. I think I proved my thesis or on why this is a great spot to take profits. See, so the actual TP1 comes in at above 3 ATR. But knowing what you now know, what you all now know, right? What I have known, you would want to actually take profits in this area and not just kind of hope that it gets up here or up here, right? Because historically speaking, right, over the last year and a half, we've seen that price rarely gets over this level. So this risk reward ratio doesn't look that good on paper, right? It's only a 1-to-1 almost. However, price is not too far from the buy zone. And if I remember correctly, VST has good contracts. Yeah, so these are pretty good. It's a 35-cent bid-ask spread. This one's 25 cents. This is a 195, right? Yeah. So these October 17s, 210s, I think those are perfect. And your risk is defined, right? You already know you're gonna risk about $10 here to see if you can't make about $10. It's slightly more. So going up to $15, coming down about $11, right? All right, Walmart. This thing is beautiful. This is actually, I made a video about Walmart a few days ago, or maybe yesterday. Only 2 views. You guys are not watching my content. No, I'm just kidding. Yeah, so I made a video about Walmart and why it's October's top pick. Essentially, this thing is just beautiful. I mean, look at this pattern. Let me remove my drawings for now. Right, so we have this level where price has been rejected multiple times since, what is this? Since February. So this is February of this year. All right. Rejected. Price didn't come back up here up until August. Rejected. And then September. And now we're up here. So the interesting thing, right, is that when price got rejected in February, it dropped massively. When it got rejected in August, it also dropped massively. It got rejected here in September, and we're still up here in the area, right? Usually it's followed by these red candles, and so far, so green. For my people who love to study candlesticks, this is what they would call a hammer. And I believe this is a bullish candlestick pattern. What I know for sure is that it's a beautiful looking chart and momentum is positive, right? We got these blue bars. It's been positive momentum. We got our squeezes and prices not in the buy zone on the weekly, but this is the daily on the 195. Here it is. Essentially, it's in the buy zone on the 195, right? It's a little off. That's okay. So the ideal, right, entry would be like this. Between 102.77 and 101.88. This is ideal, right? 101.88 to 102.77. So this is the ideal entry. Okay. And again, we have the nice setup. The exponential moving averages are stacked positively. We got the 8 above the 21, above the 24. We have our squeezes, and we have positive momentum. So we had all of this dark blue. Real quick, the light blue is positive momentum and gaining positive momentum. The dark blue is positive momentum and losing positive momentum. The red is negative momentum and I don't want to say gaining, but negative momentum and losing or gaining more negative momentum, I guess. And then the yellow would be positive momentum or negative momentum and gaining positive momentum. I think I said that right. Positive and gaining, positive and losing, negative and losing, negative and gaining. I don't really know if I said that right or if I explained it correctly. Essentially, light blue is what you want to see when the squeezes go from red to green. And when you're entering a position, you want to see it turn yellow, from red to yellow. Not the dots, the momentum bars. All right, so here's an example. Dots were red and momentum bars were blue. The red dots turn green and momentum bars are blue still. That's the light blue. That's what you want to see. So you want to enter your position here at red dots. And when you get blue bars, you want to get ready to take profits, right? That's a good trade setup that worked out positively in your favor. Here, we had orange and red dots, right? We had the moving averages stacked positively, which was great. But when the dots turn green, the bars are red. And you can see price, right, was failing here. So that's not good, especially if you're long. But you can see that these bars, right, they were red. I'm going to make these longer, right? So the bars went from dark blue to red. That was no good. Now the dark blue bars went to red. That was also no good. But here they're turning, or they turned, right? We have our first momentum shift. And the bar turned yellow. So that is our first positive confirmation that we want to see upon entering a position. So you can enter when the bars are red, that's fine. Typically, the bars will likely be red, especially if you catch a great entry like this, right? Like a wick underneath the 34. That's like your perfect entry. But when I see the bars go from red to yellow, it's a momentum shift, and I'm happy to get in. Even if the price is slightly above my buy zone, I'm still happy to get in here. This is art, not science. You can make it science, right, by saying only enter precisely when the price is between the buy zone. If you do that, that's great. But you may miss a lot of great opportunities, right? Where you're being a stickler down here for like, maybe 50 cents out of the buy zone or $1 out of the buy zone. And then price maybe comes way up here where a difference of like 20 cents in premium down here is now you missing out on $300 gain per contract. All right, I hope that helps anyways. So these are upside targets, all right? I would stop out under 101, okay? Under 101, so about there. And I would like to just let this thing run. I want to see this thing run all the way up here to 110. Is it possible? Let's see. This would be risking $1 to make 3 and 70. So this is on the 195. Okay. Now, one thing you got to remember is that this swing, this pattern is coming out of the weekly setup. All right. So the actual targets for the weekly chart would look something like that. Okay. So that first target on the weekly is actually $112, which is beautiful. On the 195-minute chart, which is the one that I would be trading, right? The one that I am going to trade, the one that I am trading is the TP3 is at 110, which is still short of TP1 on the weekly. The reason this works this way is because the bigger time frame that you're trading, you're going to have more time. So if I was actually trading this weekly chart, the buy zone was down here, right? 90 something dollars. Okay. So the last time I could have gotten in would have been on the week of Tuesday, the week of September 2nd. All right. That would have been the week that I had to get in down here. So it had 3 weeks, right? Essentially, from when this setup became valid, meaning from when I had the first orange dot, right? The dots orange and red. I would have had 3 opportunities here, the week of the 18th of August, the week of August 25th, and the week of September 2nd. That was the last 3 weeks that I had an opportunity to get in on this position to ride this up to 112. Trading on the weekly chart with options, I would be trading, 170 days, 111 days. This would be the type of position I would have been looking at, giving myself like 180 days total or so. So from August 25th, about 180 days would put that February 23rd, okay? So this is January, there's no February, so I would have went to March. And price would have been down here around 98, so I probably would have got the $100 strike, which were these. Let's just see what these would have been worth back then. In August 25th, the low on these was 528. So they're almost up 100%, right? They already hit 100% last week, right? So assuming you got in somewhere near the low, last week would have been 100%. Right now you'd be up still decently, right? About 50% or so. And so the reason why I would get 180 days, 6 months, is because it's a weekly chart. So each candle is one whole week. So it takes a lot longer to see the move play out. On a 195-minute chart, right, 2 candles is 1 day. So I can get 10 candles and that'd be 5 days. But on the weekly chart, 10 candles is like 2.5 months. I hope that makes sense, guys. If you're following me, put a 1 in the chat. That's funny. Okay, seriously though. So that's how the time works, right? On Walmart, since I would be trading this 195-minute chart, I'm happy going out here to October 17th, just 20 days of time. All right. If you want more time, feel free to grab maybe these October 31st series where it gives you 34 days, or you could even grab this November 21 series. I believe Walmart has earnings in November. November 20th. So the November 21 series would be the earnings series, okay? You can also tell that if you look at the implied volatility, 21%, 21%, 21%, 21%, 28%, right? So that 7% increase is because they have earnings this expiration series. So you could give yourself 55 days of time. You can buy one of these strikes, the 105s, just out the money. You can buy the 100s, slightly in the money. And you can hold these up until earnings. And chances are, because I'm a betting man, I'm going to say that Walmart will be somewhere up here, deeper in the hundreds. Maybe hitting that 112, maybe hitting that 121, maybe even getting crazy and hitting 130. It's 55 days from now, so anything can happen. I believe this next month or two will be a really great month for Walmart. I mean, you guys seen it with me. The weekly chart, right, is primed for a breakout. This thing is right here at resistance. It's been underneath this level since February of this year, testing it multiple times. And this is the first time that after being rejected, it did not have a significant drop, right? Significant drop. It has a green hammer candle. You know what? Let's just check it out. Hammer candle. Let's see what it means. A hammer candle is a type of candlestick pattern used in technical analysis that indicates a potential bullish reversal in price trends. Okay? Potential bullish reversal because price came down and then it bounced and came up. So it's a potential reversal from this. Bullish, I think it's very bullish. This chart is clearly bullish. I mean, look at this. The price is going from the bottom left to the top right. That is an uptrend. This is the most bullish chart I've seen all night. Okay? So everything about this chart to me is screaming new all-time highs. And I want to get involved. I want to come up in here. I want to buy a November contract. I want to buy an October contract. I want to buy the stock. You know what I'm saying? Love this chart. All right, ADSK. Look, I already have a plan drawn up from whenever I was looking at ADSK. Maybe last week, maybe 2 weeks ago. So ADSK has this beautiful chart on the 195 minute. Why is it beautiful? Well, this is just what I love to trade here. So we got this bullish flag, right? I mean, this is just, it's just beautiful to me. This is the way I was trained to trade, and so I have fallen in love with it. Okay, let's remove some of these drawings. So, my buy zone between 319 and 321. Okay, so if you look over here on the right, there's some color-coded things. They line up, right? Green lines up with 5 ATR. Red is where the 3 ATR is. The white is the 8 EMA. The light blue is 21. And the dark blue is the 34. So I already know my buy zone is going to be 319.04 to 321.60. Okay. I'm going to use 319 as my stop loss. Let's just imagine we got in where price closed. Boom. And 3 ATR as my take profit. So risking $1 to make $2.27. If I wanted to get some Fibonacci targets, oh, look at this. So this is beautiful. TP1 and 3 ATR lining up together, right? We love this confluence. I love this confluence. This tells me that it's highly likely for price to get to this area once we break over this point of control here at 324-ish. All right. Let me see. So you guys can see volume, right, increases and then boom, and then it tapers off. All right. So this is where all the buyers and sellers are located. Once price breaches this area, this thing is gonna take off. All right. Assuming the buyers win. Right? If price gets up here and the sellers win, then I would expect this thing to die or sell off. Typically, price will travel between these volume shelves, is what they're called. Okay. And so when price finally breaks over this area, there's like no volume here. So this thing is going to fly. Yeah, ADSK. Let's look at the options real quick. This is again 195-minute chart. Let's see, do they have earnings coming up? No. This is not till December. So this is a weekly chart. Let's see where their actual all-time high is. So this again, really nice looking chart. All-time high is at 344, which is just above 5 ATR on the 195-minute chart. All right. I can absolutely see this thing making new all-time highs if it gets over this 325 area. If you see ADSK at 326, then you best believe that it's likely to come up here and make new all-time highs. I would absolutely bet my money on that. Price is only 7% away from making new all-time highs. That's like nothing, guys. I think this is probably a 7% move here. Look, this was an 11% move in one day because they rocked their earnings. All right. So anything is possible here. I love this setup. I love the chart. Let's move on. ANET. Love this setup. They have earnings November 3rd in the morning and prices right above the buy zone. Oops. Oh, look at that. So price is not only above the buy zone, but the buy zone happens to be where the point of control is here. So this is just picture perfect. More confluence, right? When multiple things come together to validate the thesis. All right, so buy zone here would be essentially 138 to 142. All right. Point of control is coming in at 141 and 50 cents. There's a lot of volume here. So I would like to use 135 and 50 cents or so as my stop loss. 135 and 47. So we're gonna put our entry. Let's just say we got it up here. 135.47, and we put this at 3 ATR, risking $1 to make $2.25. That's awesome. Let's see what the fib level would be. It would come up here around 160. All right, but to be on the safe side, we want to target that 3 ATR first. Okay, so if price stays right here Monday morning, this is the ideal place to get in. I'd place my stop down here, 135 and like 50 cents. Why I would place it there is because of all this volume here. Let me turn this off. All right. So even though volume fizzles out here, there's a high concentration of buyers and sellers in this zone. So I would want to cut my loss and say, okay, this thing's a loser if it loses this kind of thick volume All right, that's ANET. Let's see what these options look like. What was this chart? It's a daily chart. All right, so for a daily chart, I want more than 20 days. I want at least 30 days. $142 stock. So 90-cent spread is it's not amazing per se. Um, I think I would want to get these 150s actually. So this is a 40-cent spread. It's a lot tighter, and it's a little bit out the money. Um, this is a better spread. This is a 30-cent spread for the 149s. So those 149s are actually not bad at all. I'm comfortable with going that far out the money, right? Like little $8 out the money, because price is already essentially at 142. So 142 to 149 or 150, $7, $8. But also because that is essentially where this first zone of resistance is. And when price gets here, right, these things will be at the money. So these $4 or $5 premium might be like this, $7 or $8 once it's at the money. So I'm happy to risk that because the target is actually up here at 156. While I'm here, let me just show you guys another tool that I use. This is optionsprofitcalculator.com. This is where you can come to find out what an option might be worth when it gets to where you want it to get to, or when and if it gets to where you want it to get to. So October 31st. So I'm going to choose the October 31st. And let's just go with those 149s because it had such a tight bid ask. So I want to find out what these things will be worth up here at 156, or down here at, well, my stop loss was about 135. So the way this thing works, you want to give it space. So I'm going to say 133, and I'm going to say 160 is my zone. I'm going to calculate this, and here it is, okay? So if price gets to 135, I will essentially lose half of what the option is worth, okay? This up here shows you the dates. And then if the price gets to what I want, which was about 156, I will essentially double my money, right? 126% return, right? Up until October 10th, if price gets to there, I will essentially double my money. If it takes the entirety of the contract, 30 days, I will still make 27% on this contract, right? So the faster the move happens, the higher the premium goes in the contract. And the slower it happens, right, the slower it goes. By the end, it's what your strike, the value of the contract will be whatever strike you chose, plus or minus the premium that you paid for it. If it just gets to 151 and say it happens by October 10th, then the position will be up about 39%, 38%, right? So again, that's optionsprofitcalculator.com. That's ANET. Let's see, CRC. Oh, I don't want that tool. CRC. All right, so this one I like. When do we have earnings? November 6th. This thing has got space on all its charts. Got a lot of space here on the monthly. Oh, this is interesting. Let's see. So this is the all-time high. Where's my magnet? And the low would be over here around 93 cents. Imagine catching this thing at the low at 93 cents. And then just having this nice 6,000% gain. Okay, so this is interesting. The reason I set the Fibonacci retracement is because I saw how close the all-time high was to where price is approximately at this moment in time. Wanted to see where these resistance levels come in. So even though I have this set up here on the 195-minute chart, it's good to know that there is strong resistance right up here at $61. All right. So again, my buy zone is going to be 54.44 to 55.44 essentially. That's my buy zone. Okay. And these are my TPs. So getting in, let's just use the middle of the buy zone. I would stop out under 54, which is just slightly below the 34 EMA. First target's going to be around here, risking $1 to make 229. Second target about the 3 ATR, risking $1 to make $3.86. And then my last target, which I am happy to sell just before that really big resistance on the monthly chart at 60.91, giving me a $1 to $6 risk reward ratio. So I really love this setup. I love that TP2 on the 195 lines up with the 5 ATR and just below that really heavy resistance point that we found again here on the monthly chart. All right, because price hasn't been over this since 2015. So if I hadn't seen that, right, and say I bought 3 contracts and I sold one up here and the next one up here, I would maybe be waiting for that last zone, which likely won't happen right now just because that resistance point is such a strong resistance point. But anything's possible, of course. But seeing that that's where that level lines up, I would just be happy to take profits right up here at 5 ATR. If it breaks out, I would let it break out, reconsolidate, kind of like that. Break out, reconsolidate, and then get in if I wanted to ride it higher. But I don't want to hold up through this per se. I'd rather pay myself and then look for another setup. Patience is key, and there's always new setups in this thing. So pay yourself when the market makes money available to you, and you'll be golden. So this is CRC. I don't think I've ever traded CRC, so I'm wondering what these options look like. So they only have monthlies, but these are fine. I'm happy to trade these. Look at this. What is that? 35-cent spread, right, for these 55s. I like that. The 30-cent spread. 30-cent spread for the 60s. I like that. These 60s down here have a 30-cent spread also. You'll pay $2.15 for these. When do they have earnings? November 6th. So these November 21s would be fine if you want to hold up to earnings. If not, 20 days is plenty of time, in my opinion, to trade a 195-minute chart. And CRC, what do you move on a daily basis? CRC moves about $2. So this thing moves about $2 a day. It's only $1 away from the buy zone. So that's very likely that could happen, Monday. And then from the middle of the buy zone to this 5 ATR levels, $6. So This thing is very likely. This thing can get up here by Friday. It can come down into the buy zone and bounce back up by Friday and, you know, pay out a lovely amount of money. So I'm happy to buy CRC. I'm happy to buy CRC with this October 17 series. And probably just go in the money here. This 55s. If I wanted to save a little bit of money, I would do the 57.50s, but I like these 55s. That's not bad. 35-cent spread. You get a 63 delta. And yeah, that's CRC. Let's go to 5. So 5 looks good here. They beat earnings. They're squeezing. Momentum is positive, right? Momentum is light blue positive. And, price is just out of the buy zone. The PLC is down here at 140. That's where all the buyers and sellers are, right? You could see it was resistance, resistance, then support, 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 support. The buy zone, what is that? 146 to 149. Oh. So that's the buy zone. Because the PLC is down here, it's highly likely for this thing to test that. This one's tough. I say it's tough because I would like to use the PLC as the stop loss, but I don't want to. I would only use the PLC as a stop loss if I got in at the 34, essentially, right? So if I have a $7 stop, I'm going to want a nice risk reward ratio, right? And I don't know if 5 will give that to me. So it'll be $7 down. Let's slap on this long position. Again, I would only want to get in at 34 for this chart specifically. And, selling at this first resistance points is about a 1 to 1.2, which is not bad. This will be the first resistance because it was resistance here, resistance here, resistance here, resistance here, resistance, right? This thing has been resistance here multiple times. Let's make a nice resistance color. No, everything else is red. Let's just make it yellow. So resistance, 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 right? So that would be my first target, targeting that level. Again, price would have to pull back first. This thing looks like it wants to break out. So, I don't know that price will come back down here. But if it did, I would want to get in. Ideally, actually, like that, something like that. 140 to 146. So again, this is kind of artsy, not exact. Although my preferred buy zone is between the 21 and 34, that isn't always the case, depending on what the chart looks like. And then my next target be up here, risking 1 to make 180. Let's see what this monthly looks like in terms of where price is now. Yeah, so look at that. So we have this area up here at 167, which again lines up with 5 ATR. So I like that. That I like. All right, that makes me a little bit happier about where the ideal entry might be. And I'm more comfortable holding for this thing to come up here because that area lines up with the bigger swing. All right. I'm also more comfortable raising this buy zone to 150, a 1 to 1.5. I don't mind that. So again, guys, this is just my setup, right? This is the way I would set up my risk. You guys can use my ideas. You guys should use my ideas to make your own trade plan, right? You shouldn't just take my trade plan because we have different risk profiles. One of you may be willing to risk only $100 and I might be willing to risk $1,000, or maybe one of you is willing to risk $10,000 and I'm only willing to risk $25. So you have to kind of, this is just for informational purposes. You know what I mean? So what was this? This was the 195 minute. There was nothing on the daily. Oh, it was the daily. Yeah. So for the daily, I'm gonna want more time. These November contracts. This would be the one for me. The 155s, 50-cent spread on $150 stock. That's fine with me. So those November 155s are cool. Google's been on a tear. Look at this thing. So Google, since it was down here at 20 bucks, has notoriously ridden the 3 ATR, right? Bop, 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 bop. Bop, 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 bop. Bop, bop. Bop, bop. But it hasn't really gotten through it. So it could ride this thing up further. That can happen, right? It's done it multiple times, as we just saw from way down here at 2001 or 2015 rather. So for the last 10 years, Google is notoriously ran up along the 3 ATR, but not necessarily getting up to 5 ATR. Many stocks rarely get up to 5 ATR. But one thing I love about Google right here is that, right, it's set up the momentum shift positive last month. As you can see here, when momentum shifts positively, it can run for several months after that. This could be the beginning of a, brand new run for Google, setting new all-time highs here. I mean, we are at new all-time highs, but it can continue to set newer all-time highs. That's the monthly chart. This is the weekly here. I mean, this is just incredible. From April till now, this thing is up 82%. All right, this is incredible. For those of you that don't know, Google is actually like a $3,000 stock or something like that. Maybe more. $6,000 stock. I don't even know. So what these companies do is they do stock splits. And so, originally the stock may go up in price, and then after a certain amount of years or after the price gets to a certain level, they do what's called a stock split, right? And Google happens to have done, I have it here in my notes so you guys can't see, but Google has done a 40 stock split, meaning that its shares are actually worth, so price right now is 246 times 40. So one original share of Google actually cost $10,560. They've just done splits so many times and diluted their stock. by 40x, meaning that in order to own one original share of Google, you have to buy 40 shares as the stock is priced currently. So when you see these crazy moves, it's like insane. Like this 80% move means that, Google was um, the 80% move is incredible because 80% ago, Google was at, I can't do this math off the top of my head, but whatever level it was. All right. And essentially, if it was like a $4,000 stock, then it gained 80%. Or, let's see here. It was likely a $6,000 stock or so. All right. So it gained $4,000 in 161 days. That's how I look at it. That's probably confusing for you guys if you're not familiar with stock splits, or if you don't have a calculator in front of you. All right, so this is Google. I don't think we found an actual setup. Let me see. All right, so the 195-minute chart is setting up. We got some news on Google. Let's see. Look at that. So Google has bought, they have repurchased $155 billion in shares over the past year. Yeah, so it makes sense considering what their monthly chart looks like, right? I wouldn't be surprised if the bulk of those purchases came in down through here between March and May. 155 billion at 80% gain is, they're closing in on 300 billion off that purchase. If they've been purchasing all the way up, then who knows where this thing is going to go. I mean, it could close the year up here at 5 ATR and continue to push. This stock is a monster though, clearly. So we have the 195-minute chart. Let me wrap this video up. I don't know how long it's been going for, but it's pretty long. Longer than usual. Hope you guys find the content helpful. If you do, like, subscribe, hit the bell, all that wonderful stuff. Alrighty. So where price is currently, to where I would stop under 240. Why 240? It's just below this swing low. This swing low is at 240 and 74 cents. So my stop would be at 240. If this gets broken, then this area is no longer support. It would be what? Resistance now. Let me show you all. It's better to see visually, right? So the price was supported here once, but over here it was resistance, 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 resistance. So if price gets below that level, I want to cut my loss just below that. In this case, that's 240 and 74 cents. So I'm going to cut my loss just at 240, just a little bit below, right? At the next round dollar amount. Also, you can see here on the left that at 240, this volume shelf is here. Okay. So if price was going to be supported anywhere, it would be at this 240 level, right? So if the price closes underneath this volume shelf or underneath 240, I went out. All right, the point of control is up here at 251. We got 3 ATR up here, 5 ATRs up there. Let's see what the fib retracement says. All right, so it's got TP1 up here at 260. Again, 3 ATRs coming in at 257 approximately. 5 ATRs up here with TP2 at 265. I love this setup for Google. Again, I would say that the October 17 series, which said 20 days at the start of this video, is now showing 19 days. I would say that that's typically enough time, but the setup just began, right? So like in a chart like ANET, okay, so this thing has been squeezing already since September 22nd for about a week. Google just began. So I'm going to want more time than just the 19 days. I want time for that squeeze to play out. Let's see when they have their earnings. They may have earnings, which might be October 28th. Perfect. So this October 31 is the one that I would go with. And because it's an earnings event, I'm happy to go a little bit out of the money. All right. I'm happy to go a little bit out of the money here because these contracts tend to hold the premium because of the earnings event, the high volatility event. Excuse me. So I'm cool with these 260s. I'm cool with these 260s. 1031, 260 calls. I like that. And again, I would want to get in the buy zone, right, between 241 and 246. Make my box purple. Between 241 and 246. All right. Stop loss. Stop out on a close under 240. Like the 1031. 260 calls at $6 or less. All right. And targeting, new all-time highs. I like the 260 to 265, or what is that, 257 to 265. All right, and the last one on the list. We finally made it, guys. We went through all 13 names. I typically don't do that. I typically just show that each one is a valid setup, that there's room to run between where price is currently and where the 3 ATR is, and then I might set up 2 names. I have some time this evening, so I figured why not give that time to you guys to provide a little extra value. Okay, here it is. So PLTR. So PLTR came up here, right, around 190. And basically, since August, has been on a downtrend. And then recently, in the beginning of September, we finally broke out of the downtrend. Moving averages are now stacked positively. And we are now having a setup, all right? And as Google only had 2 red dots, this one has 4 red dots, all right? So things are looking promising here. I would be targeting new all-time highs for sure. Let's see. What's the low here? So the low of this swing is 174.29. So I would want to stop out under 174. All right. Stop loss 174. we got all-time highs up here. Okay. Price is at the buy zone. All right. So I love this. Price is at the buy zone. This is essentially the setup. Risking one to make $3.57. I want to get in exactly where price is closed on Friday. If price opens there on Monday, that's the perfect. I'm happy to do that. Just risking just below this swing low, which you can see was support here, support here, support here. And if we go over here, it was resistance, right? And then support, and then resistance here. So key level here at, what is that? 174, 175-ish. Let's see what the fib shows. Boom. So the fib has TP1 and the all-time high and 3 ATR. Multiple confluence here at this zone, all right? This is a great target here. I really like this target, this 189, 190. So targeting that gives us a 1 to 3.5 risk-reward ratio. It targets previous all-time highs. It targets a Fibonacci extension level, and it targets 3 ATR. I mean, what's better than that? If this thing actually breaks out past all-time highs, absolutely 200 is the next big psychological level. You know, TP3 comes in at 197 and 5 ATR comes in at 198 and 44 cents. But let's be honest, guys. 200 is the main event. You know? That's what the people want. That's what the people want. It gets the people going. All right? So 200 would be the level to watch. Psychological level. Let's look at some contracts for PLTR. Did we see, do they have earnings? They have earnings November 10th. Is there a November 10th series? No, but there is a November 21st. These contracts are quite heavy, quite expensive. They are quite expensive. Let's see, this was what? The daily. No, this was 130. All right. So I'm cool with these October 17 series. I like these 180s. They still have a really good delta, 48 delta, 15 cent bid-ask spread. I mean, what more could you ask for, right? So let's write this game plan out. 10, 17, 180 calls. When price action is under 177.4, stop out under, what was that, 174? 174, take profits. Ideally at new all-time highs, which is 190 plus. That's the trade plan. That's the video. Again, if you guys like the content, like, subscribe, hit the bell. Happy trading, guys. Good luck.